Hello, everybody, and welcome to yet another session of SteelMint webinar Engage 4.0. After having covered a range of topics, the one to be discussed today is no less important. We will discuss emerging market opportunities in the Indian long steel industry from the seller's perspective. I'm Madhumita Mukherjee, editor SteelMint, and with me today is my colleague Pratik Srivastava, who will be co-hosting this webinar with me. He will be joining me from Raipur in Chhattisgarh. Pratik, can you come forward, please?
Yeah, surely, ma'am. Hi, everyone. I'm Pratik Srivastava, and I am GM Steels Operations.
Thanks, Pratik. I also want to thank the Indian Steel Association for extending their support to this webinar. And a reminder to the audience to share their questions, which we will take up towards the end of the session. So keep your queries coming in. Now, on to the topic. The topic for discussion today is emerging market opportunities in the Indian long steel industry from the seller's perspective. So what is the Indian long steel market scenario like at present? The market has witnessed continuous fall in prices from the past 18 consecutive weeks now. Demand from the infra and construction segment has remained strong in January due to restocking activities. But from the end of February, we saw there was a slowdown in the market, which resulted in a decline in prices. And demand remained sluggish as buyers were cautious about placing orders amid fears of further price falls. And they resorted only to need-based procurement. Prices are likely to remain under pressure in the near term as the monsoons are around the corner. But we will hear more about the on-ground scenario and what the next quarter or even the rest of the fiscal would have in store for us from the long perspective and what factors could influence these outcomes. So we have with us Mr. Sushil Kumar Pradhan, Chief Marketing Officer, Jindal Steel and Power with us for this session. Mr. Pradhan is a gold medalist from the Xavier Institute of Management, Bhubaneswar, and a BE in Metallurgy from NIT Raipur. He has over 27 years of experience in sales and marketing of steel products. In his current role, he is heading sales and marketing for Jindal Steel and Power Limited, which is the leading manufacturer of long products such as rails, structurals, panther rebars, wire rod coils, as well as flat products such as specialties, plates, and coils. Over to you, Mr. Pradhan. Welcome to Engage 4.0.
Yeah, thank you, Madhumita. So good afternoon, everyone. I'm Sushil Kumar Pradhan. I'm the Chief Marketing Officer in Jindal Steel and Power Limited. First of all, I would like to thank SteelMint for having this wonderful webinar series every year. This helps in bringing the buyers, sellers perspective together. Along with that, there's a lot of discussion on raw material, productivity issues, a lot of interesting topics. So I thank SteelMint for this initiative, right? Will I share the screen, Madhumita?
Pratik will share the screen. Pratik,
no, I'm sharing. I'm sharing.
Okay.
Yeah. Yeah. So the topic for today is emerging opportunities in Indian steel industry, and I will be bringing a seller's perspective into this aspect. Before discussing more on the long steel market, just have a look at what India is looking like from a global perspective. So India is a bright spot in global steel industry with the only major economy having a positive growth in production, steel production, as well as consumption in CY22. WSA forecast a heavy growth in steel demand, which is aided by a strong government infra spend, housing boom, surge in private investment, capital goods, sustained growth in automotive and consumer durables. We'll discuss more on the demand side, on the long product side, in the later part of the year. But the point is that India, with the strong growth in production as well as consumption, the production number looks like 5.5% growth, whereas the consumption looks like around 8.2% growth. So India is not only producing more, even the consumption is more, and consumption pace is much higher than the production phase, so bringing down the gap between the production and the consumption. when we look at the breakup of flat and longs, if you look at the graph on this side, if you look at the graph on this side, till traditionally long in India is having a major share among the steel products. Barring this FY19, if you look at all the years, Indian the long share is close to 52-53%. In FY22, it increased to 56%. Post-COVID, the growth in long is much higher, whereas in the flat, the consumption-driven demand has taken a beating in the market. Whereas the good push on the infrastructure side has helped long to maintain the demand, right? So today, in the last financial year, FY23, the share of flat is 46%, whereas the share of long is 54%, both in consumption and production. Long products are rebars, structurals, wire rods, plain rounds, railway material, and there are some other products. Most of these products go into infrastructure, barring some rounds and wire rods. Most of the structurals, rebars, railways, they go into infrastructure. So therefore, they are directly linked to the capital expenditure. So the growth in capital expenditure will have a direct proportion to the growth in long steel demand. If you look at the breakup on flat and steel, secondary and primary producers, the primary producers is only around 32 to 33%, whereas secondary holds a share of 68%. So long is characterized by a predominant presence of secondary players. So when we spoke of the characteristics of long products, what are they like? So barring rails, the long market is heavily commoditized. With bar, rods, and structural sections accounting for around 95% of the market volumes. In rails, of course, there is a duopoly between SAIL and JSPL. Barring rail, the ISPs, the integrated steel producers, are a minority player, and we saw that 68% share is held by the secondary players. The secondary steel the market is intensely competitive. The secondary producers, including the steel re-rollers, provide stiff competition to the ISPs. The market is evenly distributed across the country. There is the demand. It is unlike flat product where the demand is centered around some demand centers. The long market is evenly distributed across the countries. The import is negligible in long. Most of the import which is happening in steel is in the flat segment, so import is negligible. So therefore, it's much more isolated to the global scenario as such. There are some other characteristics, like long is heavily branded products, so every secondary or primary producer is doing branding activity, and since it's a commoditized, so everybody try to decommoditize the product and getting a premium. So those are the other characteristics of the long market. Right? You look at the long consuming sectors. So long, as we spoke, long is mostly driven by infrastructure. So the infrastructure development, industrial construction, house building activities, these are the major consumption sectors for long. And the demand is expected to be largely driven by government infrastructure projects. We have the National Investment Plan, where government has committed more than $1 trillion investment between 2022 to 25. There is Sagarmala project with 8.5 lakh crore investment, Bharatmala project with 5.3 lakh crore investment, the railway capacity augmentation projects, affordable housing with close to 20,000 crores investment. Apart from that, there are multiple other Government of India missions, projects like 100 smart cities, gas pipelines, Amrit, Jal Jeevan mission, etc. Apart from this, there is what we are witnessing now is that there is huge investment by considering the growth in infrastructure sector and the manufacturing sector. A lot of leading companies are putting up a lot of facilities like cement and steel. You are seeing major investment happening now, apart from power also. So what we are witnessing is that huge capex is spending by the private players also now. after the government is spending. So close to $150 billion of spending we are expecting in next decade or so, which will again go into capex formation, leading to the demand in the steel. So let's discuss about this. This is an interesting thing, so India is in a nation building phase. So when we speak of nation building phase is the period in which infra investment activities accelerate and stimulate domestic steel demand. During this period is characterized by high elasticity of steel demand to GDP. And of course, since most of it is infra spending, so long product CAGR will be even higher than the flat product CAGR. See, Japan witnessed this phenomena of nation building phase during 1950s to 1973, post World War II. During that period of time, the GDP in Japan was 9.1% CAGR, whereas the steel demand grew from 4 million ton to 89 million ton steel products consumption. That is 14.2% CAGR. So steel demand elasticity was 1.56 during that period of time. In China, if you look at the phenomena between 2000 to 2013, where the GDP growth was 10% CAGR, so steel demand grew from 124 million ton to 741 million ton, with a 14.7% CAGR, or steel demand elasticity of 1.47. Now you compare this to the Indian phenomena now. So India post 2022 till 2033, we are witnessing a high GDP, 6.5% GDP growth consistently. We are taking a very conservative, moderate look, whereas we expect the GDP to remain much higher than this. And steel demand at this growth of 7.8%, which will take us from 120 million ton today to 215 to 230 million tons. I have taken an elasticity of 1.2 only, but whereas we have witnessed the elasticity during this phase remains very high of 1.4, 1.47. So if you take it 1.47, the demand will be close to 300 million tons. So we are in so what we call is Amrit Kaal, next 25 years, which Prime Minister keeps on saying, we are witnessing the real steel demand growth during this period. See, India remains an outperformer will be remaining an outperformer in FY24 as well, and some of the factors which will help India to remain an outperformer in FY24 is Indian economy is much better placed than our global peers. The GDP growth remains high as compared to rest of the world. The inflation rate is well contained in India. Post COVID, most of the major economies faced very high inflation rate, where in India, we are not witnessing such type of phenomena. The government has done a good job. Policy rates increase. If you look at what happened in US or Eurozone, India, the proportion of rate increase in policy is much lower as compared to our global, the major economies. The government debt to GDP in India is much below what the major economies has. So these are some of the key factors which we feel that may help us in maintaining a sustained growth of GDP and sustained growth of steel demand. India is also less coupled to global economy. Our export intensity compared to major economies or major demand centers is much less compared to other economies. Our merchandising export is only around 1.8% of global trade, whereas the engineering export is only around 1% of global export. So this is so most of our demand is domestic demand, which is helping us insulating ourselves from the global slowdown. The falling commodity prices, in oil, natural gas, coal, iron ore, scrap, this will have a positive impact on the economy. Oil and natural gas prices will help us in containing our forex reserves. So this is one factor which will again help India. It's a positive for India. The domestic growth prospects is very high. Indian capex is at an all-time high of 40 trillion rupees. S&P Global PMI index hit 31-month high in May 23 to 58.7, whereas globally it is below 50%. So these are some of the factors which I feel will help us in outperforming all the economies in the world, and it's a positive for the demand scenario. Let's spend some time in this slide. What we tried to do is that we tried to put the numbers to the steel demand. In FY23, our projected GDP is 3.75 trillion rupees. Out of which the capex, we have taken the data from Union Budget, SBI report, and other sources. So it's close to 33 trillion rupees is the capex budget. The capex to steel intensive goods is close to 60% share of capex is to steel intensive goods. That is 19.9. Out of this 19.9, direct steel purchase is close to 30%. So that's 6 million tons. 6 trillion rupees. If we take a steel price, it's much higher level we have taken. So when we did the study, so it gives a capex based steel demand of 78 million tons. In FY24, since the capex is expected to be around 40 trillion rupees, this demand is expected to be 96 million tons. If we do the same formula. Why I'm stressing upon capex based steel demand is because this is the demand which will help sustaining the long demand, rather than the consumer-led demand, which is not growing much higher from 42, 44 only we are expecting. Whereas on the capex-led demand, it is the steel demand is we expect it to go from 78 to 96 million tons. So this slide. If you look at these numbers and if you look at the calculation behind that, what we are witnessing is a very, very high growth in long product demand in the coming future. FY24 with this historic high capex with worst behind us could translate into a strong steel demand, and with elasticity of at least 1.4% over GDP growth of 6.9%. That is 9.1% growth we are witnessing in the steel demand. See, construction will be a major driver to demand to long product. So there's a World Steel Association research. What we are seeing in the one graph, one map, we are seeing the share of construction in GDP state-wise. Whereas in the second map, we are seeing what is the potential for growth to infrastructure. So the states where the infrastructure is not very strong, there we expect that the potential is very high. So the map is, and then what is the potential for steel demand growth, infrastructure demand, steel demand growth in state-wise. So if you look at the map, the last map, we witness almost all the states will have a high to medium high steel demand, which is driven by infrastructure. So growth in construction sector will be a pan-India phenomenon. We are expecting driven both by infrastructure spending and housing demand, especially affordable housing. And then it has significant share in states like Tamil Nadu, UP, etc. But majority of states are expected to have a strong infrastructure development, especially along major corridors. So in some of the states like J&K and Bihar, steel will be driven almost entirely by infrastructure development. So, if you look at this map and this research, it appears that pan-India, we are witnessing a phenomena where the steel demand will be high to medium high, So what are the challenges? In FY24, we are expecting this year, monsoon forecast is 96% of long average. So along with El Nino, which is an uncertainty, and bad monsoon is a bad news for the country. We still have, the country has a higher cost of capital, although we have witnessed that the policy rate has not grown so much as the major economies, but our cost of capital still remains one of the highest in the world. Political stability and policy consistency in states, that is the very important factor which drives the steel demand. And then the infra project delays. 68% of announced projects are delayed. Cost overruns are very high in the projects, and total expenditure compliance is only around 55%. Whereas some of the challenges which which we face, with the, in the current financial year. So what are the opportunities? See, as a steel producer, we we must promote the usage of steel. So in India, still the per capita steel consumption is very high, very low compared to what China has or the world has. So we have a lot of scope for increasing the steel usage. Steel is a superior alternative. We need not say that. It's infinitely recyclable without loss of quality. It's a longer life cycle and lower life cycle cost. Steel-based structure, lower steel-based structure has a lower project completion time. It has exceptional strength. It is a better place to achieve the net zero for the country, compared to what a concrete-based structure or a cement has. We have also developed India's first fire-resistant steel, which will help us in promoting steel usage in construction of buildings. There are some of the opportunities which we'll feel, so as an industry as a whole, working with the project companies or EPC, we can create, we can innovate, we can work upon how we can promote the usage of steel. So that's all from my side.
Thank you, sir.
Thank you.
Thank you, Mr. Pradhan. That was a very detailed and very, very informative presentation. Pratik, would you like to take the first question?
Surely, ma'am. So now we will start with the question and answer session. So first question from our side is, sir, how do you see long steel prices behaving going forward in the upcoming months and quarters, considering the fall in raw material prices?
So Pratik, the raw material prices, whatever drop we have seen, has already been factored into steel prices. The steel prices have seen a steep drop in line with the raw material prices from Feb mid or Feb end onwards, And today we are at a point where, and moreover, the raw material futures are not showing any significant correction going forward. The raw material prices are almost at the lowest. $222 of coking coal is, I think, the lowest point, and there is none of the future is showing any correction in raw material prices. So so I feel the prices have stabilized at this level, and I don't think there is any scope for correction. Apart from the raw material prices, most of the industry, today we are at the point where the profitability of most of the steel companies, whether it's primary or the secondary, are at the lowest level, which we have seen in last many years. So I don't think there is any scope of further correction. Prices, I feel, have been stabilized, and going forward, it may remain similar to this level or may increase depending on the raw material prices and depending on the demand. What we're witnessing is the good demand growth in coming months, so that will help us in maintaining the steel prices. So, so I feel we are at the lowest point of prices as far as the steel prices are concerned.
Sir, you said in your presentation that the Indian economy is somewhat decoupled from the global economy,
right,
and that the export intensity is much less compared to other countries.
Correct.
But even then, let me ask you, is the Indian long steel demand impacted by the slowdown in the global longs market, especially since supply and demand balance in the global long steel products market is not getting any better, and the main export destinations are seeking lower offers almost every week?
Yeah. See, Madhumita, what we witnessed in 2 years' time, if I recall, we exported a lot of rebars and longs, semis and rebars as a company 2 years back, right? Just after COVID or immediately after COVID. But last year, we saw our export was negligible in rebars, hardly any consignment we exported. Still, whatever, we have not dropped any production. So, whatever was surplus production we had, capacity, in fact, our production has gone up in rebars and longs. So whatever surplus capacity we had, that got entirely consumed domestically. So, and then second phenomena which we have seen is that, in the first slide when I spoke, the domestic demand production growth was 5.2% overall as an industry, whereas the demand growth was 8.2%. So the addition, the gap between consumption and demand was get fulfilled, and most of it was in long product rather than in flat product. That also we saw in the presentation. So the long product, I feel, is very balanced domestically, the demand and consumption, barring a few months of slowdown, which happens every year, right? What we are witnessing in the last 2 months, this slowdown is mainly because of the global steel prices dropping, raw material prices dropping, which has impacted pricing of all the steel producers and buyers side away from the market. For a few months, they were destocking the material, but this phenomena doesn't sustain for a long, So the demand side is very strong domestically in whatever we are producing. See, and export in long, with I don't think is a phenomena which we may witness immediately. But then, of course, we need to correct our prices compared to what is happening in the globe, and that we are already witnessing, right? That we are already witnessing the gap between what was the global steel price in long and what is the domestic steel price may remain at the similar level, but the correction may take place, but that is more of a raw material driven correction.
Okay, thank you, sir.
So another question from my side is that the inventory levels with the mills have increased, or it is at the same level at the time, and are there any production cuts expected in the next quarter? And if so, to what extent to offset the demand drop?
So, Prateek, we are the inventory has somewhat gone up with the producers, but the inventory increase is not so significant to demand for a production. However, we must remember that in the first quarter or during the monsoon season, every major producers take their annual shutdown. So whatever we will see is the annual shutdown of all the producers, which may come up one by one. But then there is no production cut so far. We have considered, and neither we have any plan. I am speaking for the industry. We don't have any plan for any production cut as such. Whatever inventory built up, small inventory built up has taken place, that we feel that once the demand will be back, it will get consumed domestically. And we feel with the price level getting gradually stabilizing, and there is no outlook for further price cut, the demand will come back maybe from next fortnight or so.
Fantastic. So I wanted to ask you one question, and that is, what factors have been impacting demand and sentiments for structural steel and wire rods in particular? I mean, how will the segment fare in the second half, do you think?
Yeah. So structural steel is somehow similar to the demand growth in rebars, right? However, most of the higher structure, the bigger structural steel gets consumed in the major projects, unlike a housing project or building construction project. But what we are witnessing is there are many of the huge major projects are getting announced in the city, in the country. The refinery expansion or the power plant expansion, which the tenders have been announced or the contracts have been awarded. Most of this demand we are expecting to come in the next quarter or second half of the financial year. And that will sustain the structural steel demand. We expect as a company that the structural steel demand will be very strong in the coming quarters. We in fact are planning another structural mill, which we announced a few months back, and the rail mill, so that my structural capacity becomes free to cater to the country's demand. Wire rod, on the other hand, is mostly linked to the automobile and other consuming sectors. So automobile demand, although remains strong, but it is not so strong, as it used to be, and that's impacting the wire rod demand. So wire rod demand is a little subdued as of now, but wire rod traditionally starts picking up from September, October onwards, just before the festive season. So
Right.
we expect that to happen this year as well.
Thank you.
So one last question from my side. So it is from the project-based perspective. Sir, can you please throw some light on some of the upcoming infra and construction projects? And since the monsoon season has arrived, so how will be the demand with respect to the project based? How will be the project based demand with respect to long products?
So we already are witnessing, a lot of projects on the NHAI side. The high-speed rail project is still continuing. The demand is very strong from the high-speed rail project, and the next phase has been announced. The contract has been awarded, although the demand will start coming up in a few months' time for the next phase also. So that's a major project which is happening. Apart from that, there are a lot of metro projects that are happening in the country, for which good demand is there. There are a lot of refinery projects are there, a lot of power plant projects are there. Refinery expansion we have announced. There are a lot of course, the wind and other energy sectors may not consume a lot of long products, but those type of projects also are there in the country. Affordable housing is something which every state is now doing. So that will also drive the demand.
Thank you, sir. Thank you for answering the question. Now it is time to take some questions from the audience side. So we will be able to accommodate few questions from the audience side also. So one of the questions which has come from the audience is, what is the total capacity of JSPL and what is the domestic to export ratio currently?
So JSPL's capacity is 9 million tons as of now. And our export last year was around 20%. This year it will be around 15% or so.
Yes. Another question is, what is the JSPL growth plan as we see the demand in India will be increasing in the coming year with respect to infrastructure and construction segment?
Okay, so we are very aggressively pursuing the capacity expansion, and JSPL traditionally has been a long steel player, and most of our capacities are catering to infrastructure segment. Whether it is rebars or heavy structurals or rails or plates, they all cater to the infrastructure segment. Our next phase of expansion is on the flat side. So we are adding another capacity of 5.5 million tons, which will come on stream very soon. So we are in the final stage of commissioning of the project. So we'll add 5.5 million tons very soon. And then every 2 years, we have planned to add another capacity of 6 million tons or so. We have an ambition to reach around 27 to 30 million tons by 2030. That's the growth plan we have. Especially on the long side, we have planned to increase our rebar capacity. We have recently announced a rail mill in our future plans. We are also expanding our structural capacity by doing some debottlenecking and all. So this is all, this will all help. And also we are increasing our plate mill capacity from presently Angul plate mill capacity from 1.4 million tons to 2.2 million tons. So these are all going to the infrastructure space.
Thank you, sir. Yeah, ma'am.
There's one question from Mr. Sunit People from JSW Steel. Now he's asking, secondaries play a major role in terms of market sentiments. So how do the primary players ensure their share of the market with growth in mind?
Okay. So, over a period of time, primary and secondary players, they all have created their niche space in the market, and if you look at the market, the demand and scenarios are entirely different for long and for primary and secondary. While the primary players essentially cater to major projects across the country, the secondary players cater to smaller projects or to localized demand. So this growth scenario, which pans out in this particular space, will be, a space in which primary and secondary players will operate. However, going forward, I believe I believe secondary producers are also improving their quality and they're adding a lot of capacities. So, so the gap between primary and secondary will gradually merge. That's my opinion, right?
Okay, I hope that answers your question. The gentleman from JSW Steel. I have, I can see another question from one of the attendees. What is your expectation around in terms of steel consumption for FY24 and projection for steel production for FY24 as well?
So in the presentation somewhere, I gave a calculation where the consumption of FY24 we are expecting close to 140 million tons. And the production will remain almost at the similar level. That's what we are witnessing, So the gap between production and consumption is gradually merging. It will be a very balanced situation. Yes.
Pratik, you want to take on some more questions from the attendees?
Yeah, ma'am. One more question is there, sir. That will long products other than infra projects have growth potential in any other sectors, especially in automotive or yellow goods sector?
Yeah, so in automotives, like globally, in automotive industry for heavy vehicles, the chassis and all are mainly produced from the long products. The long structure members goes into that. Domestically, also some of the players do that, but then it's either made from flat steel. So that's one area where the long can be consumed. However, in smaller vehicles, the structure will not go. Right. One area where automotive or yellow goods will consume is the wire rod. Whether it is on a tire bed and in the tires or in the fastest, all those industries. So wire rod gets consumed in these sectors. So that's one product which gets consumed in automotive yellow good type of industry.
Thank you, sir. Ma'am, we can take one more question if we want.
Yes, there is one question which is just trying to be asked. With the upcoming elections in May 24 and many state elections also coming up in December this year, do you think there will be a slowdown in project awarding and hence steel consumption as we enter the second half of this fiscal?
So that's a very interesting question, and it can be looked at either way, right? In my one of the slides where I spoke about the challenges, I spoke about the different states and the policy inconsistency among the states, which leads to demand growth or degrowth in the state. So that's one which gets implemented. So India is a very politically sensitive state, and every political party has a different type of agenda. So whether so that's one risk which we carry for, which is there. But then considering the way the country is growing, or the underlying basic assumptions are same, so I feel may not impact much. State-wise, we may have some problems, some issues here or there, some inconsistency, but at the central level, I think what we are witnessing is a nation building phase, and any political party which comes to the power will have to maintain the pace. So I don't feel it can have a minor blip here or there, but I don't think we may look any major corrections.
We do have time for a few more questions. Pratik, do you want to ask a few?
I believe that one more question can be asked. Sir, this will be the last question from the audience side. Sir, with all major steel makers are coming with facilities mainly focusing on auto segments or auto grades, how JSPL is targeting to auto customers and strategy to cater the segment? Any chance of service center facilities near to the customer base?
We are planning that. So see, our auto strip mill will come upstream very soon, maybe in September or so. And then we have planned to go to color-coated galvanizing, cold rolling, and all those downstream sectors as well. Auto will play a very important role while having this product. And auto is a major market in which we will target. And of course, auto cannot be served without having a service center. So we are working on our plans to set up service center pan India. We may do it ourselves or we may tie up with somebody. That's different questions which we'll work it out. But we have definite plan to have service centers. Without service center, you can't cater to auto customers.
We can squeeze in one last question. So in order to leverage the steel industry's recyclability properties, do you foresee any shift in the working of integrated steel producers towards increased usage of scrap as it is environmentally more sustainable?
Yes, so we all are working on that. In fact, Tata Steel is putting up a scrap-based EAF facility in Punjab. So, but what we are looking at how we can increase the scrap usage within our plants and reduce the reliance on blast furnace or DRI. So we are working on that, and maybe our future expansions will be more towards how we can. We as a company has an ambition to become net zero by 2035 or so. Although Indian ambition is 2055 or so. So we are very aggressively targeting towards that. We are working on that, and increasing the scrap usage is one area where we can achieve that. Where we can reduce our carbon intensity. So we're working on that.
Okay. There are a few more questions, but time is running out.
Okay.
So we can get them answered by you, sir, later, I
Right.
think.
Yep.
Yeah, so now, we have to drop the curtains on this session as of now, but these questions will get answered. So we have to wrap up the session now, and it was a very, very good session. I hope our viewers benefited from it as much as we did. A big thank you to Mr. Pradhan for taking time out of your busy schedule to participate in this webinar. I also want to thank the Indian Steel Association for supporting this webinar. A big thank you to our viewers for their invaluable time. And thank you to Prateek for joining in from Raipur. I'm Madhumita Mukherjee, editor Steel Mint, signing off till the next session. Bye, everybody.
Thank you, ma'am. Bye.